The best way to destroy the capitalist system is to debauch the currency. That wasn't a tweet from a crypto-anarchist in a basement. That was Vladimir Lenin. Imagine you worked 40 hours this week, but when you went to the ATM, your boss had already taken 20% of your time back. Not your money, your time. You didn't agree to it, you didn't sign a contract for it. But every time you look at the price of a ribeye steak or a house in the suburbs, you're looking at a crime scene. Today, we're talking about the invisible tax, the one they don't vote on in Congress, but the one that is currently eating your future alive. We've seen this movie before. It's a remake of the 1910s, and the plot is identical. Before 1913, the US dollar was as boring as a dial-up internet connection. A dollar was a dollar. Its purchasing power was stable because it was anchored to something real. But then, the Federal Reserve was born, and the money printer was plugged in for the first time. Think of the 1970s Nifty 50 era. Investors thought blue-chip stocks like Kodak and Polaroid could never fall. They ignored the fact that the government was printing money to fund wars and social programs, leading to the Great Inflation. We are living through the 2020 sequel. In 1971, we officially left the gold standard. Since then, the dollar hasn't been money, it's been a currency. And currencies are designed to do one thing: melt. Let's look at the villain's scoreboard. The US national debt is currently over $34 trillion. To put that in perspective, the US is now adding $1 trillion in debt every 100 days. If you spent $1 every second, it would take you 31,700 years to reach $1 trillion. The system is now money printer go burr on steroids. Since 2020, the M2 money supply increased by roughly 25%. That means 1 out of every $4 in existence was created in the last few years. When you add more slices to the pizza doesn't get bigger. Your slice just gets thinner. That thinning is why the median house price in 1970 was $17,000, and today it's over $400,000. The house didn't get 23 times better, the dollar just got 23 times worse. So where is everyone hiding? Right now, everyone is piling into the Magnificent Seven: Apple, Nvidia, Microsoft, you know the list. These 7 companies account for nearly 30% of the S&P 500's total value. It's a liquidity flood. Investors aren't necessarily buying these stocks because they love the PE ratios. Nvidia's forward PE has hit over 40x at peaks. They're buying them because they are hard assets in a digital world. They're the lifeboats. But here's the twist. When the invisible tax, inflation, stays high, the central banks have to keep interest rates higher for longer. This creates a pincer move. The cost of your debt goes up while the value of your cash goes down. You are being squeezed from both sides by a system that requires constant inflation just to stay solvent. End. The takeaway. The future isn't a straight line to zero, but it isn't a moonshot either. The invisible tax is a math problem, not a political one. You cannot save your way out of a currency that is being intentionally debased. The only way out is wealth architecture, owning assets that the government cannot print more of. Whether that's equity in great companies, real estate, or orange coin, the goal is the same. Stop collecting currency and start owning the math. The market doesn't care about your feelings, but it deeply respects your risk management. Subscribe to Sketchy Man Finance. Let's fix your math.